My advice and what I've learned over 30 years, starting a company from the ground floor is extremely difficult. I mean, the first 5 to 10 years, extremely rough. I think in any business, as most businesses fail, we've had several that have been successful. This is Fred's third that's been very successful. So I think it's fun, but I've changed jobs probably 20 different times. So what I did 18 or 19 years ago, it's much different than what I do today. And I think that's exciting. You know, we've built a team of people who, can really run and do things much better than most of us. And I think surrounding oneself with really smart, capable human capital is critical to be successful. I mean, you got to be willing to let go. You have to, move away from the credit and let people, flourish. And I think that's what we've been able to do successfully here. And we'll talk about as we go through the session here. I think the best is yet to come.
Sure.
We're in, you know, drug distribution in the U.S. There's over $500 billion of drugs sold in the U.S. Okay, that's retail, hospital, specialty. The segment we're in is long-term care pharmacy. It's about 25 billion of the 500 million, okay? And we focus specifically and we're really purpose built to serve assisted living pharmacies. While we serve skilled, we serve behavioral health, we work with hospice groups. About two-thirds or more of our business is assisted living, and that's where we were founded. Our first pharmacy in Phoenix, Arizona, was a pharmacy focused on serving the assisted living community with a gentleman named John Saliba. And we've grown from that pharmacy in Phoenix to 50 pharmacies today, around the country, focused on assisted living communities. And with our growth, this year we'll be well in excess of $1 billion. I mean, our financials are public. We still only serve about 12% of the U.S. market. So that's the theme that I'll talk about today. While we've grown, our company's been successful, we still have a very small percent of the U.S. market, i.e., there's the opportunity for us taking 12 to 20 to 30 to 40.
What was the determinants for the company to go public? What was the determinants that went into saying now's the time?
Jack, it's something we have looked at and evaluated probably 7, 8 years. We've been doing this for 20 years. So that's a long time to be growing a company. We've gone from, 50 million in revenue to over $1 billion, a lot of change. We have 230 employee shareholders. Okay. And, you know, after 20 years, one, would like to have a better handle on what their ownership could be worth. So that's one thing to get a valuation for, the currency that people own. We're heavily employee owned. The second is we've got 12% of the market. We've built a heck of a business, the platform to manage this low margin distribution business, and we want to continue doing what we're doing. So, do we, options, you could bring a private equity group in, that would create a lot of leverage. We have little to no leverage on the company now. We could potentially partner with a larger strategic, company, but we as a group wouldn't be able to go from 1 to 2 to 3 billion and keep growing the business. So it's so we can keep doing what we're doing because there's a huge opportunity. And then also to, provide a valuation for these employees that own a substantial part of the business today.
Well, can you, as a finance leader, can you give us a number of milestones for the finance function itself? When did you build the FP&A team?
We've been investing probably for the last 10 or 15 years. You start with our business planning process. We've been doing that really since we started. When we had 5 locations, we had a rigorous business planning process. today we have a rigorous business planning process. So that's critical to having the foundation to go public. So business plan, okay? And, 10 years ago, we started investing in a data warehouse when we didn't have really the capital to do it. Taking all of the dispense data, purchasing, operating, labor, and starting our relational database so we could manage the business internally. I'll talk more about what we've done externally with our database in a minute. So investing in the data warehouse, and that drove dashboards to manage, revenue, scripts, labor, delivery, purchasing, and we need all that to manage the business to the business plan so we've got the profitability to later go public. Okay, so all this kind of builds on each other. Okay.
As I reflect on this, you must have hired an IR executive, or you must have, thought, what resources do we need here? And you folks, I think, have always been very careful when you do that, when you make those types of hires. Can you share any thoughts on, and you mentioned it goes back 2 or 3 years. Again, this is just a real milestone that you folks probably have just debated and talked about for, all of the life of the company when that day comes. How am I doing? Am I close to your
No,
reality or
no,
not really?
it sounds like you've been listening. If you've been here in some of our meetings the past 3 or 4 years, but let's start with FP&A. I mean,
Yes.
we've been data driven. We've had good data the last 10 years, but the last 4 or 5, we began developing our own FP&A talent and have promoted some folks in to manage that. And we probably, I'm part of the team. There are probably 8 of us that are working on FP&A, and
Yes.
we work it as a team. So we've got a great group of people working and managing the underlying data, developing the message, the talking points of, really how we're telling the story. So we've got a
Yes.
great team to do that. On the IR side, we made the decision to bring in an outsourced partner 3, probably 4 years ago to help
Yes.
us. So we've got it outsourced. They're locked arm in arm with us from an IR standpoint and are working with us and have been working with us the past 3 years as we've been working and modeling and working with the analysts. Now that we're talking with investors, they're helping us with that. So FP&A, we've developed over many years internally. IR, we're working with an external firm, and we'll continue to modify and expand that as we go through the next 6, 12, 24 months. Obviously, the priority are the new items of working with the investment community. So that's a huge one. The second, and probably even more important, is the organization transition that I mentioned. We have grown from 1 to 50 locations, and we need to make changes strategically in the organization to position us to continue to grow the business. And we'll continue to invest in human capital systems, the financial team to keep changing and growing the business. And we've got to stay focused on what our customers need. These are the residents in our communities, the communities themselves, and then the health plans like the Cignas, the Aetnas, the United Healthcare, and the payors. So we've got to stay focused on really what our customers needs, and we've got a lot of different customers that we serve.
David Morris, thank you for joining us on CFO Thought Leader.
Jack, thank you very much. It's a pleasure catching up again. Thank you.